looking at a chart of gold, this is a daily, so I'm going to drop down into a 15-minute, and I am going to see if we can identify a potential entry for a long opportunity. Okay, I want you to focus your eye on this blue line, which you're going to see on the charts when we drop down, and that is the current daily order block. Okay, that we have just traded into, right? I'm not using this one because we have not traded above this one, and that may be a future order block, which has taken liquidity because it has taken out yesterday or the low of its previous day. But I want you to focus on this horizontal blue line where my mouse is. That is the current daily order block. So dropping into a 15-minute chart now, okay? And I want to see if my bias is to the long side. Well, I want to see a retracement and look for a potential buying opportunity. My eye first goes to here, okay? But I think that is too close to where we are. That's not enough of a retracement in my view. And this order block has been traded into, okay? So immediately when you see this chart, there's something that should be very easy to identify, and that is this massive wick, okay? Notice that that was a beautiful buying entry yesterday, okay, at New York Open, and it's diving straight down into the daily order block, okay? Now, I think we need to get back down here, and all I'm going to do is mark out the 50% range of that wick. That's a great buying opportunity if we get down there, so that's where I'd like to buy. That's very close to the daily order block, okay? And now it's just a matter of do we get down there. Now, I can also see there's a lot of stops under these lows, okay? So there's a lot of liquidity sitting under this area. So if let's see if we can draw a line here. There's a lot of stops where people have gone long from this level. We can see that right now we're consolidating, okay? So we've stopped moving up. And my view that we are potentially going to go down. And if we take out this current liquidity that's resting where that blue line is, okay, which I believe is a fake trend line, okay, so we need to sort of come down there to take all that liquidity, right? There's a lot of liquidity here, and that means we can come back down into this to rebalance this wick, and maybe even potentially drop back into the daily order block. We don't need to, but that's certainly a possibility. So now it just is a matter of watching the clock. Where are we at the London Open? Have we taken this liquidity yet or not, right? Is this still intact? Are we heading down there? Are we close to there? Or where are we in New York, right? Are we down here? Okay, now it doesn't have to come all the way down here, but I do want us to see some kind of movement back under these lows, okay? To me, an entry inside of this wick to go long gold would be ideal. And being so overbought with gold moving so much in the last session, I think we are due for a pullback, okay? So that's what I'm looking for. I did do a separate video on the directional bias, so the underlying narrative in my view is still to the upside, and that's why I'm looking for longs. And so now it's just a matter of where do I get in, and this very quick analysis is all I do. So this video has been running for 5 minutes, and that's all it takes, 5 minutes to understand where we are now, what's the underlying longer term narrative, which I've already assessed, and now where do I get in? Somewhere at this level under those lows. But time is what's going to be most important. I want to be down there at London session or the New York session. And that's all I need to know. Now, am I going to short? No, I'm not going to short. I'm not looking for shorts. My directional bias is to the long side. So I'm not looking to short down there because we may not get it. Secondly, it's not the right session to be trading gold. And so I'm waiting for the London session or the New York session. And I'm hoping that by the time we get to the London session or the New York session, this Asia session that we are currently in, right, we'll trade back down to there. If it doesn't, maybe London will trade back down to there and New York will trade back up. Or we might just continue going down for a further dipper pullback. Only time will tell. Okay, so am I going to buy a limit down here? No, not at all. I still want to see down here my long setup, right? So I still want to see rules that indicate to me that we are reacting positively in that zone for me to consider a long entry. And what I want to see is by the time we get down there, we may develop a order block on the shorter time frame, perhaps in London, and then New York trades into that. So we've got a low, higher low. Well, that's what the order block will be, right? The order block initially will be the low. Let's say it's in London. And then you're not going to move up. And then New York might trade back into the order block developed and formed in London, hopefully at 2 a.m. Time's important, right? I want to see an order block formed at the right time for me to trade back into it in New York. And that means then we have a low and a higher low. And that would then indicate to me we are perhaps in line with the higher time frame directional bias, which is to the long side. And we have a setup that is, for me, the right kind of setup to look for to go long at the right time. Okay, so all of those things are important. Okay, so let's now watch the market, right? Learn price action behavior. Okay, it's not about trading. This entire channel is all about learning price action behavior. So be careful and note what I'm saying here. Okay, I'm not saying that we are going to take long positions when we get down here. We are identifying where this pullback may come into and why we feel that the pullback will come into that level. We have stops under there. This is a fake trend line in my view that I believe we need to come back down into. That means there's liquidity above this large wick that needs to be balanced. And I like the fact that we have this blue line representing this fake trend that indicates the liquidity above there. And so that makes sense to me that the market has purposely left that liquidity intact to take it on its move down to rebalance this wick. Okay, so putting all of those things together indicates that this would be a nice area where any down move might be a great idea for a turnaround in price. But it doesn't mean we immediately take a long position. Okay, we want to see the right setup. So we identified where we want to see the setup, why we want to see it down there, why we think it's going to be down there, and at what time we want to see it. And that whole intention of getting down there is to be able to get in line with the higher time frame. Okay, if I feel the market is going up, okay, I always want to see a dump before the move higher. And so that's what we're forecasting here. Where could that dump come into, and what do we see above where we think it's going to come into? Do we see liquidity? Do we see gaps or wicks? Okay, do we see higher time frame order blocks that give us more on our side to give us evidence that our thinking might be right? Okay, so watch the market now. Your job is to watch and learn. Okay, watch the market, learn and see how this pans out. It's all about studying the charts. Okay, I'll talk with you in a future video.